Welcome, everyone. My guest today is reporter Connie Kim to talk about the recent M&A deals we've seen in mortgage and mortgage tech. Connie, welcome back to the podcast.
Thanks for having me, Sarah.
Yeah, it's great to have you on. Of course, the news of the day was the fact that the ICE acquisition of Black Knight went through. We expected that this week, but I would love to talk to you. You have been following the story from the start and kind of give us the background on what happened here and how they had to change their deal structure so that it was acceptable and all the challenges. So maybe you can do a time travel back to the beginning of this saga.
Yeah, sure. As you may recall, it was back in May 2022 when ICE announced a planned merger with Black Knight. They are obviously the biggest players in the mortgage tech space. Empower takes about 10 to 15% of the market share, and ICE's Encompass is estimated to have about 40 to 45% market share. Now, I guess the major pushback against this deal was stemming from antitrust concerns. A lot of lawmakers, the CHLA, the Community Home Lenders of America, and the FTC has raised concern about how it would stifle competition. So fast forward to March 2022, the ICE was sued by the FTC to block the merger deal. Now, the FTC claimed that the merger would give ICE and Black Knight a significant position in the market for loan origination software, which it could use to push customers to its other mortgage services and products instead of rivals' offerings. And the FTC also claimed a merger would stifle innovation and reduce lenders' choices for both origination and mortgage servicing. So there were a lot of back and forth between the FTC, ICE, and Black Knight about how they were going to address these concerns. And as you may recall, ICE and Black Knight, they agreed to sell Black Knight's LOS system, which is Empower, and product and pricing engine unit, Optimal Blue, to address these antitrust concerns. And they also amended their deal terms to reduce the valuation of Black Knight to about $11.8 billion from $13 billion. So a lot of amending to the deal, a lot of selling of businesses to quell antitrust concerns. But finally, the deal went through on Monday, and ICE will be having a press conference later this month to see, how the merger went through and how these promises are being kept with the investors.
So ICE is selling Black Knight's LOS Empower business and Optimal Blue to a subsidiary of Constellation Software, right? That's one of the big things they needed to agree to. Do we know that much about Constellation Software?
So basically, Canada's Constellation Software is a provider of software and services. What they do is they acquire, manage, and build industry-specific software businesses. So Constellation isn't necessarily focused in the mortgage industry. If we look at some of the portfolio companies they serve, it's across various markets, including communications, credit unions, tour operators, auto clubs. So if we look at the commission's order, it provides structural relief and tools to preserve competition. So for instance, ICE and Black Knight, they're required to seek approval from the FTC before acquiring any other businesses related to LOS or PPE for the next 10 years. Both firms are prohibited from enforcing any non-compete or non-solicit provision or agreement against any employee who seeks or obtains a position in the divested business. And of course, a monitor will be appointed to oversee compliance with the proposed consent order. So it seems like the FTC really tried to kind of address the antitrust concerns and try to preserve competition in the industry. Only time will tell whether other mortgage tech companies will kind of step up with their own LOS system that will be big enough, competitive enough to go against ICE and Black Knight. So yeah, we'll definitely keep an eye on that, and we'll keep you updated.
Thanks, Connie. Let's talk a little bit about some of the other M&A stories that you reported on last week. So we had two lenders. Tell us about that.
Yeah, we had a couple of M&A deals last week. It's not that big, but it's an attestment to how, there are still lenders looking for that opportunity to acquire other lenders to grow in an industry that is still right-sizing. As you mentioned, Next Tier, the holding company of Next Tier Bank, is going to acquire Mars Bancorp, the holding company of Mars Bank. They're both a little bit small in terms of size. For instance, Mars Bank held about $528 million in assets as of June 30th. They posted an origination volume of about $50.9 million in the past 12 months. And Next Year Bank, they had about $2.1 billion in assets as of June 30th and produced about $50.6 million over the past 12 months.
So where are they based out of? What is this? What parts of the country will this affect?
Yeah, so the combined company and branch locations will operate under the Next Year Bank brand, which is basically based in Pennsylvania. As you may know already, Mars Bank, they're an independent community bank in Pennsylvania. They offer mortgage lending, retail, and commercial banking in 6 locations throughout the state. And then Next Year Bank, they're also based in Pennsylvania. They have about 27 branches in Western and Central Pennsylvania. And they basically, in its mortgage division, the bank offers construction, purchase loans, home equity loans, as well as HELOCs, in addition to providing consumer loans, wealth management, and merchant services. So this will impact the entire Pennsylvania market. And it seems like both banks are independent local banks in Pennsylvania. So it will mostly impact that area of the market.
Okay, let's talk about the other M&A story that you covered last week, which was that Fathom is acquiring Elite. Tell us about both of those companies.
Yeah, so it's Encompass Lending Group, which is a subsidiary of real estate services platform Fathom Holdings, which has acquired Austin, Texas-based Elite Financing Group. Elite Financing Group will operate under the umbrella of North Carolina-based Encompass, which has a presence in the Dallas-Fort Worth area. It seems like Elite Financing Group has 2 branch locations in Austin and the Colony with 28 sponsored mortgage loan originators. And it posted about $164 million in production volume over the past year, according to mortgage data platform Modex. And Encompass Lending, which is acquiring Elite, they have about 11 active branches in 7 states and Washington, D.C. And the lender originated about $148.5 million production in the past year. So again, these 2 companies aren't huge in terms of origination volume, but we are definitely seeing, that M&A activity still happening across the mortgage industry while it's still right-sizing. And I just saw this interesting data today about how there are still layoffs happening across the mortgage banking firms. It seems to be about 1,200 people in the mortgage banking sector were laid off in July. And by the end of July, companies classified as real estate credit employed about 224,600 full-timers, which is a reduction of about 35,000 compared to the same period a year earlier. So definitely a lot of layoffs still happening across the industry, but some lenders who still want to take this opportunity to acquire other lenders are taking that leap to prepare for when the market turns over again.
Well, and we had, just recently, retail lender Guild Mortgage acquired First Centennial Mortgage, and then we had Mr. Cooper Group acquiring Home Point Capital earlier in the month. So lots of M&A activity, no matter what part of the housing ecosystem you look at. Thanks, Connie. Appreciate you coming on and talking about the reporting that you're doing. Looking forward to more stories.
Yeah, thanks for having me again, Sarah.